You're listening to the Decentralized Talk Podcast, your crypto connection.
Decentralized Talk. Decentralized Talk.
Alrighty, guys, welcome to another edition, a very special edition of the Decentralized Talk Podcast. We're coming at you live here from Houston, Texas, and from the kind of outskirts area of Austin, Texas. We're doing things a little bit differently this week, doing a live episode. And the main reason behind that is Easter's coming up, Good Friday's coming up. People got stuff to do, hang out with their families. We know that you do too. And so out of respect for everyone's time, we're going to do a live episode. We're going to try to kick it off now on Thursday, and that way you guys will have something to take with you into the weekend, and hopefully something to put next to your pillow while you're crying your Bitcoin tears of fear.
And you get to see our beautiful faces. Lucky listeners.
And you get to see our faces. First time you've seen our faces since the very first episode. So that's a pretty good sign.
That one person doesn't remember what our faces look like.
The internet keeps everything forever. Guys, this is what it's all about right here. This is one Bitcoin, right? So I got this for half off. I paid $3,000 for this right here. It's in my hand. It's hard currency. I can feel it. It's tangible. I love it. Put it in my pocket. I'm going to make some jewelry out of it. This is what it's all about, guys. So obviously that's tongue in cheek. Or just not even, I don't know if it's tongue or cheek, but it's not real, but it is funny because so many people believe that is what Bitcoin is, right? They can't get their minds wrapped around the idea that it's not tangible, in the sense that a traditional coin is. So, right now we're experiencing a pretty big dip in Bitcoin. And it seems like every other week we're having this episode, right? We're having this talk. We're going to walk everybody off the ledge. It's okay. I think if you look at the charts, it's okay. And I think people are talking about this death cross. Well, the death cross is something that's happened in the past. The last 3 out of the 4 times, it didn't turn into a downturn. Looks like we just got a viewer. How do I figure that out?
People are obsessed with this death cross, but 2/3 of the time, it doesn't end up with a reversal. So, yeah, don't just buy into the death cross just because it sounds scary. I mean, it does sound scary, but it's just the name. That's
a pretty terrifying name.
Yeah, when the moving average is crossed, it doesn't necessarily mean that it's going to happen. It's just a trend that can happen. Don't freak out, guys. Don't freak out. I mean, if you're freaking out, you're thinking short term. Really, you need to think. You need to zoom out a little bit, because if you compare it to where we were in December, then yeah, it's going to look nasty. But if you compare it to where we were March last year, then you're still in the green. It's all good, guys. It's all good. Don't freak out. Don't lose your mind now.
That's true. If you've been holding it a year, then you feel really good. If you've only been holding it since Christmas, which a lot of people came on right around Christmas time,
they're freaking out.
They're freaking out. Yeah,
if I came on at Christmas time, I'd be freaking out too, because I bought in at like $20,000.
Mm-hmm.
Yeah, I'd probably be freaking out too.
Just as a reiteration, guys, this is not investing advice. We made a joke about this earlier. We're going to be reminding you throughout the program, this is not investing advice. So don't take this advice and invest with it.
Yeah, we're far from professional traders or investment bankers or anything like that. So it's just our opinions of what we think about the crypto space and where it might go and different things you can do to invest your money. So, take it with a grain of salt.
So one of my favorite investing strategies, right, to that point, is DCA, right? So if you're a new investor and you got into the December timeframe and you're thinking to yourself, oh my God, man, what am I going to do? I lost all this money. Hopefully you didn't put any money that you couldn't afford to lose in, right? Because that's the number one rule. Don't put any money in that you can't afford to totally lose. And then hopefully you didn't extend yourself or buy it on credit, right? So that you have interest payments on top of what you already invested in. So, assuming that you were a reasonable investor and you didn't invest in your cryptocurrencies only, also, right? So you want to diversify your portfolio. So we talked about that too. You want to invest in stocks, bonds, commodities, gold. These are things to diversify your portfolio, right? And to make sure that if you have a loss in one area, if you're taking a short-term loss in one area, which we believe that this is, right, a short-term loss in this area, then you have a high probability of coming back on the other side, or having something else to kind of keep you afloat to take you away from the edge. So key things before we get started here today on the live episode. Make sure you do your own investing, information sourcing, right? So go find out the information yourself, do your own research. Don't invest in things that you can't afford to lose. Diversify your portfolio and try investment strategies out that are tried and true. One of the first and foremost being DCA. All right, so you probably heard people say DCA, or you see it on Twitter, people reference DCA. What the hell does DCA mean? Well, the answer is dollar cost averaging, or decentralized
Cost analysis.
So dollar cost averaging. What is dollar cost averaging, and why is it effective, and how is it something that even in a down market right now that it can be advantageous, even though it may seem like it's not at this point in time? Heston?
Yeah. Okay, this is the way dollar cost averaging was explained to me. So basically, dollar cost averaging is putting in a specific.
This is not investing advice.
Yeah, this is basically, dollar cost averaging is putting in a specific amount of money for a specific time frame repeatedly. So, say you want to invest. Say this is the analogy that I was taught. All right. Say you want to invest in cattle. Okay, and you have $5,000, and you're looking at buying in and then selling in 5 months. No matter what happens in the market, you're just going to sell. So there's two different strategies. You can do one lump investing, where you throw all $5,000 in January, you wait until 5 months is up, and then you sell and see what you get. Dollar cost averaging would be on January, or on the first of every month, you are going to throw in $1,000. So instead of throwing it all in once, you're going to throw it in the first of every single month. So January 1st comes around, you throw $1,000 into your cattle investment. And at that time, cattle is $100 a head. So you get 10 cattle. Then February rolls around and mad cow disease comes back. Cattle drops to 50 cents, or I'm sorry, $50 per head. So at that time, you're getting 20 cattle for the same $1,000. Then the next month comes around, Oprah comes out with another book saying how bad mad cow disease is and how it'll kill your babies and all this. So the price of cattle drops even further. Now it's at $25 a head. So you're getting even more for your $1,000. Now the person that threw in $5,000 at the beginning, they're probably freaking out because their investment, they bought it at $100, all $5,000 worth, and cattle is now just plummeting. The person that's dollar cost averaging, they don't care whether it goes up or down. So they're getting more for their $1,000 every month, but they're not necessarily freaking out, because no matter what the market does, dollar cost averaging is taking the average of the ups and downs of the fluctuations of the market. So say March comes around, the mad cow disease haters start falling off, and the factories figure out a way to.
I consider myself to be a mad cow disease lover.
I love some mad cow disease. Honestly, I don't like happy cows. I don't like them really, really mad. So, okay, all right. So say March comes around, people start forgetting about mad cow disease. They start eating burgers again. The factories put in like implementations to stop it and all this stuff. And the price goes back up to $50. So the guy that's investing $1,000 every month, he's getting a little less than he was the last month, but still half off his that original $100 per head. And then the price comes back up. People completely forget about mad cow disease. They remember how much they like burgers. So the price goes back to $100. And then the last month in this example, the price just stays steady at $100. So the person that threw in $5,000 at the beginning when it was $100 per head, they got less than the person that was throwing in $1,000 each month because the price fluctuated. Now, if the price goes up, then you're getting less. If the price goes down, then you're getting more. But the point is, dollar cost averaging, you're getting an average cost of that asset, whatever you're investing in, instead of investing in it at one time in one lump sum. And statistically, it's been proven that shows the higher returns than somebody that just invests all their money in one lump sum. It's better to invest in incremental deposits instead of one time. I hope at least a part of that made sense. I don't know if it did. I guess that's a no. Since
I would say a part of it made sense.
Could you go through that again real quick?
Hell no. Because it didn't honestly make sense to me.
Hey, Prater. Okay, so
dollar cost averaging to me
version. Yeah, give us a
I don't know.
Quicker version than that.
Well, it was a great analogy, but what's
the
also
quick version is, you put in, you pick a day, say Friday every week.
This is not investing advice.
You put in $20 into whatever investment you want to put it in, and you just continually do that. And markets are volatile, some more than others, and they will go up and down. So the theory is that on average, you're going to catch, it up and down instead of, or not instead of, and in the long run, that's going to average out so that you have a better investment. And, sure, it's an investment strategy. It's not a trading strategy. So this is something for a long-term investor to use.
It's a good point.
If you're an active trader, you're probably not going to use a strategy like this. You're going to be looking for dips and buy lows, sell highs, and all that stuff, But if you're looking to invest long term, and a lot of people don't have, $10,000 to throw in right off the bat, on a low. So, it's an everyday trader's strategy for long term investing.
Yeah, my favorite thing about the DCA strategy is that if you don't have a lot of money and you're new into maybe an entire genre, right? Cryptocurrencies broadly, you're new to it. You just heard about it on TV. All these people are driving around in Lambos. All these other people are jumping off of buildings. It's going crazy. You want to get involved in this. You think you can make you some quick money. Probably a bad idea. But you decide, well, I'm going to do the smart thing, and I'm going to kind of dip my toe into the water. And when you dip your toe into the water, one of the best ways to do it is through dollar cost averaging. So even in a period of bearishness, like right now, bearishness, of course, being a flat or negative trend in the market. When you're in a situation like this, even if you're dollar cost averaging, you continue every Thursday to put $150 in, $150 in. Then what's going to happen is that when the market is down, you're buying a lot more of that individual currency. So instead of, if the price was really high, you'd think that might be good. But for dollar cost averaging, you don't want the stock to perform that well until you're getting ready to get out. So you want to gobble up as many as possible, and then hopefully, and the way that the crypto markets tend to go is that there's a big burst right around Christmas time. It's kind of a bearish trend right around nowish, which we're experiencing. There's a general uptick over the summer, and then into the fall, there's a general uptick, and then we just go into apeshit mode through November, December, when people start to really hear about Bitcoin again and start to hear all the Lambo stories and less of the jumping off building stories.
We actually have kind of an active well, not a project, but a case study going on DCA and buying the dips.
Cardano.
Yep.
Yeah. So I've been dollar cost averaging Cardano since January, the beginning of January. I don't remember if it was the first or not. But dollar cost averaging is not sexy, guys. It is boring. It's not as exciting as like day trading or something like that. And it can be very depressing if you're dollar cost averaging Cardano, for example. Because hell, I think when I started dollar cost averaging, it was $1.07, and every week it was lower than the week before, and that's not good motivation to keep investing in something that just keeps going down and down and down. But if you believe in the project, then you believe that it's going to go back up. And so these times when it's down, 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 you're just piling up more and more and more. So I'm just piling up Cardano because I do believe in the project. And I think their smart contract platform is going to be successful in the future. So I just keep piling on that Cardano. We'll see how it pans out.
Yeah. Well, and I've been buying it too, except for I've been watching the charts pretty closely and buying throughout the week on dips. And so far, that's proven to be a better strategy.
Yeah. Okay. So we'll give a little explanation of the case study that we're talking about. So I buy every Friday, okay, like clockwork, no matter, and there isn't really a set date, a set time on Friday that I buy, but I buy every Friday. Prater, on the other hand, he buys kind of every week, but more he watches for the dips. And me, I don't care where it's at on Friday. I'm just buying it. When I got free time, I'm buying it.
I always thought it would be a cool strategy to try to take advantage of, and you can't do it as much in the crypto markets, but you certainly could in the traditional stock markets where there's an open and a close and there's different markets. Like people's paydays are typically on Thursday and Friday, right? People get paid Thursday and Friday, and it's either every other week or whatever, but typically people get paid at the end of the week. So I think you would expect to see that after people get paid, the money comes out of their bank account automatically. Everybody that's DCAing out there, and then drops in, and sometime by Saturday or Sunday, depending on how the banks work, that may drop in. I don't know what day it is that would typically drop in for most people, but it would be interesting to try to set your DCA up around when their money actually deposits versus when they got paid.
Got some breaking news here. So apparently it appears to be the first time since McAfee made his bullish bet that the Bitcoin price has dipped below the steady growth trend line, and indicates that McAfee is on track to lose his bet.
Ooh, that means he's going to lose his dick.
And what was that bet again? I can't remember.
It was $500,000, right? If it hit, he says it's going to hit $500,000, or else he's going to chow down on his own penis.
Yes.
Yeah. So
$500,000 by when? By the
2020. Yeah.
Well, who knows? I mean, I think a lot of people have shown that the parabolic trends. The parabolic trends, Bitcoin's supposed to be at 8,500 this year. It's supposed to end the year at 8,500.
Yeah.
So we'll see. I don't think
it's going to be entertaining either way for old John McAfee.
Yep.
I think either way, it's a win-win for the audience. If you're into that sort of thing, I
don't know.
I guess if that's your fetish.
I don't know how that could be a fetish. I didn't even know that was a category.
Oh, there's a fetish out there for everything, man. There is a fetish out there for everything.
All right, so let's talk about what's another good investment strategy for people who are just getting into the market. Something soft, something that people can get into, something not complicated with complicated terminology.
I don't know if I would necessarily call this an investment strategy, but I think what we need to consider when we're looking at a bear market like we're in right now is to make sure that you're not putting all your eggs in one basket, to make sure you're diversifying your investments. So don't just throw everything you have into crypto and hopes that it's going to moon and you're going to get your Lambo next week. That's not smart. This is a good time to kind of step back and say, what are some other investments that I can partake in that would give me more security? So, maybe throw some in the stock market, or throw some in government bonds, the low risk investments, or real estate, or anything like that. I think that the point is to diversify your investments. That way, if something does crash, like I don't know if I can call this a crash. Honestly, it's not like the bubbles burst, but this is definitely a major retracement in the crypto market. But if something does go down that heavily, that fast, then you're okay, and you're not freaking out trying to sell off your position because you have other investments that are going to give you security through these hard times, through these bear markets like we're seeing now.
Yeah, and if you buy on a dip, like right now, if this is the time period where you're looking at buying, you have a much higher probability of holding something that's better in the future. As markets go up and down and up and down, I mean, you're going to buy when it's down.
Do your research on how you want to invest your money as well.
This is not investing advice.
Yeah. You should, the crypto markets are very speculative right now. So you don't want to, when speaking diversification, you want to look at the spectrum of all investment opportunities and see how you want to diversify your investments. So, if you want to be a risky investor, you might put more into the crypto markets. But if you want to be a safer investor, you might put more into stocks and bonds and gold and, real estate ETFs and that kind of stuff with a smaller amount of your investment in cryptos.
And there's a big difference between being a risky investor and a stupid investor. So that's kind of that's the main thing I think that we want to help people with is because I think all of us, we've made mistakes. Hell, I've lost a lot of money in penny stocks. And that's where I learned a lot about really super hyper volatile markets and what not to do. Luckily, I was only losing
Don't invest in penny stocks.
Yeah, right. I think that's an important point, though, is never go into any investment blind. Always go in with a plan. Where am I buying in at? Where do I plan on selling at? How long do I plan on being in this? Do I have when Lambo, when Moon? Do I have a plan to get out when it hits a certain price, or do I have a plan to sell off when it hits a certain price, or is my plan to dollar cost average until a certain date? Just go in with a plan. Have a plan, have a goal, and then when crazy shit happens, you're not just freaking out and selling off when potentially you could be wrong and you're selling off at a terrible position.
You're not buying high and selling low constantly.
Yeah, so if you have a plan going in, it helps lessen that fear, uncertainty, and doubt, and just gives you more like emotional control over your investments instead of just losing your mind when something goes down.
Yeah, no, definitely.
Well, and I think going back to DCA a little bit, that's kind of a beginner's investment strategy, also an investor's investment strategy. It's simple, it's easy. Anybody can do it. You don't really, you can keep up with it pretty simply. But, as you move into other investment strategies, they tend to get more complicated, like swing trading and day trading and all that. You're going to want to have done a lot of research, really know how to see what's going on in charts, have a thorough strategy on what you're planning to do for entry and exit points, and keep track of every one of those trades, to the T.
Yeah.
For tax purposes.
I mean, okay, if we can like go back to the crypto market and like what's going on right now, like what's an investment strategy? Like, oh my God, I lost all my investment, or I lost half of it. What the hell am I going to do, guys? Do I sell off right now? I think there's a lot of fear out there. So everybody's banning everything. They're like, oh, I'm banning cryptos and this, and I'm banning advertisement for cryptos, Facebook, Google, Twitter. I mean, that's scaring everybody, including us. I mean, we have a podcast on crypto, so obviously that would concern us. But I think the thing is, you have to look at this like from the big picture. If you're looking at this compared to where it was at December, then I mean, crypto's dead. It's never coming back. We had a good run, and have a good day, guys. It's over. But if you look at it from this time last year, or this time 2, 3, 4 years ago, then I mean, it's the greatest market of all time. We're doing amazingly. Let me see if I can share my screen here. Okay. Yeah. All right. Can you guys see this? Everybody?
Yeah.
All right. Okay, so this is the Bitcoin chart. And as you can see here, this is, let's see, what is this, February? So this is February. This was like our low for the last bullish trend here, down at like 596, somewhere around there. And we're kind of on our way down there again. And it might break past that and go even further down. It might go all the way down to 2. But what you have to keep in mind is we're not just looking at what's happened since December, okay? Because that was our all-time high. You can't just go off of only all-time high. So if you zoom out here, this is where we're at. Let's get out here. So this is this time last year. All right. And we were at about $1,000. Okay. So when you zoom out and you look at it from that point of view of where we were last year compared to this year, then it can still drop a lot, because you can't expect something to go from a $30 billion market cap all the way up to an $800 billion market cap and just expect it to keep going up. This was bound to happen. It really was. It got a little too crazy. The media got into it. The craze started. It's like it went viral. But this is the market correcting itself and saying you guys got a little bit out of control and you got a little bit ahead of yourself. The technology really isn't there to warrant an $800 billion market cap. The scalability issues are still present. And so, we got a little too high too fast. And I think what the market's telling us right now is that it's too soon. It's too soon. So, we may see it come all the way back down to the support level here at 3,000. We could see it go all the way down to the support level here at 1,800. We don't know. But the point is when you really look at it from a wide perspective, is all these little bumps here. I mean, if you look at, what is this? This is still 2017. Obviously, you see that huge jump in the end of 2017, but when you really go back in time, you see these little jumps all the time. They look smaller if you compare it to the one in 2017. But so this is a jump right here when it went up to $800 in 2016, and then it dropped all the way down to $600, and it happened again here in the beginning of 2017. The point is that these market fluctuations happen a lot in the crypto space. So don't freak out and say that crypto's dead or Bitcoin is just never going to come back, because it's just not the case. These things happen time and time and time again. And just because we saw a major dip right now, and then the market correcting itself, does not mean that crypto's dead, because in the future, it may drop all the way down to $1,000, but then 3-4 years from now, we could be saying Bitcoin's at $500,000. Man, do you guys remember the scare back in 2017, 2018, when everybody sold their positions, while the people that had strong hands and really believed in technology are just laughing on their way to the bank? This is not investing advice. I know that kind of went for a while there, but I just had to kind of get that out, because a lot of people are scared right now. A lot of people are freaking out.
You had to get on your soapbox.
Yeah, I just trying to calm people down here. I mean, really, just look at it from the big picture. Don't look at it compared to December. I get if you bought into December, I get it, man. You're losing a lot of money and you're freaking out. But believe in the tech. Believe in the tech. Do more research on the tech, and you'll realize that it's not going anywhere. It's not going to drop to zero. It's going to be around. You may have to wait 5 years for it to reach that all-time high again, but just wait. Just be patient.
I know you calmed me down. I was
Good.
Yeah, I was pretty hyped.
Does anybody want to be swaddled now?
I mean, I was just yawning because I was like, wow, I went from really hyped up to just super calm.
Good. I'm glad I could help a little bit.
I was yawning too, but actually it's because I'm more hyped up. I'm like a dog. The more excited I get, I just yawn. Wag my vestigial tail.
I don't even know what that's supposed to mean.
Well, you know what it means. You know what it means. But I'm not that worried about Bitcoin. Look, Lightning hasn't even taken place yet, right? It's still in beta.
Yeah, exactly.
There's a lot of confusing information about Lightning out there. People think that that it's out, and they say, well, if it's live, why isn't it doing anything? Well, it's kind of live, but it's live in beta. And if you're not worried about Bitcoin going corporate, then there's not really a whole lot else to worry about from a Lightning perspective. It's all going to grow. I think anybody with some Bitcoin right now, if you got any significant amount of Bitcoin and you're trying to find a way to start a node, right, so that people can start utilizing this Bitcoin that you have to process their transactions.
Definitely. Yeah, I think the scalability issue is just another thing that piled on to the FUD with Bitcoin is it's just not ready yet. It's not ready for mainstream adoption. The Lightning Network, it's a good option. I don't even, we don't know if that's going to be the solution or not. But I think what we realized is like when it really got crazy in December, when the volume was intense and we were waiting like 2 days for a transaction to go through, we realized like we're not ready to hit the main stage yet. Like, let's not go live yet, guys. And so that just scares people even more and tells people like, oh man, it's a fraud and it's a scam. And no, it's just a technology that's improving. It's just improving over time. It's going to take time. The idea is there. The basic technology is there, and it will get better over time. The scalability issue, it'll solve itself. I mean, we'll come out with updates and it will solve itself.
Yeah, I agree. Prater, what do you think about Lightning?
I don't know.
Great input.
Yeah. I don't know.
Lightning.
I mean, what do you think about the market in general? I mean, do you think we're going to dip down to zero?
I don't think it'll dip down to zero, but I mean, I think we've still got some retracement to go here. I don't think it'll go to zero. Just because eventually you're gonna get people who see it as a value and start wanting to kind of put money back in. I mean, I could be wrong. Since we've been doing this live stream, I think we've lost almost 5 billion.
Oh yeah,
market cap.
It's
so
dropping.
It's still just going down. I mean, that's
quick.
We've only been on for 33 minutes.
Yeah, it's dropping really quick. But I think the intrinsic value is not going anywhere. But now, I think what this drop could probably do is get rid of all those scammy ass ICOs and those projects that aren't going to be anything.
Yeah, it'll help clean them out.
The Trons and all the shit of the world. It's going to they're not going to have any money to fund their projects anymore, and they're just going to just float away by the wayside. But the ones that are real successful, they're gonna improve their technology through this time, and then when the boom comes back in a year, 2 years, 3 years, who knows? Next month, I mean, we really don't know.
Beat out some of the scragglers.
It's the natural way of things. I think markets work like this. Even nature works like this. Like a hurricane comes in, it shakes all the dead leaves, dead branches off of trees, and it helps the tree grow bigger. Yeah, exactly. So I think this is a very natural, very good, very organic kind of situation. And it's again, if you're not buying frivolously, this should not be something that's hurting you too bad. But if you're jumping in and you're trying to catch a wave up, you're setting yourself up for failure. And hopefully you guys are doing smart things. Hopefully you guys are buying on dips. Hopefully you guys are getting into margins.
I shouldn't have thrown all my money into Tron, my life savings. Guys, what are you telling me here? Hang on.
You know, Tron is the only coin that's kind of still in an uptrend.
I just sold on
no
my Tron.
shit.
Yeah.
Well, I guess my life savings is safe now.
Yeah, you're actually you're doing better than a lot of people if you were in Tron.
Oh, Tron.
Well, Omisego is
Well, I take that back. It's dropped pretty drastically here in the last
865.
But it's up 7.41% to Bitcoin right now.
Well,
Yeah.
there you go.
I don't know. I'm not scared
Sell a bunch
because
of Tron and buy a bunch of Bitcoin.
Because all your money's in Tron.
yeah, I know.
Take all that Tron money and put it
I
in
know
Bitcoin
Tron's
now.
gonna moon, so I'm just waiting till
This is
that
not
day.
investing advice.
No, I'm not scared because I'm thinking more long term. I mean, yeah, we might finish the year down at 500. Who knows? But for me, the intrinsic value for Bitcoin is there. It's not going anywhere. So
I'm also not scared because I'm not gonna put any money into crypto that I can't afford to lose.
yeah,
And what I've put in, I'm gonna hold. If it does go to zero, you know, I've wasted more money on stupider things than that.
yeah, exactly.
And if it comes back, awesome. You know, I think the technology's there. You know, a lot of people make comparisons to Beanie Babies, and you know, we all know Beanie Babies had great technology behind them.
Oh man, those things
the
they're so
comparison's
far ahead
great.
of their time.
Exactly. So you know, I think it comes back in some form or fashion, and it's possible. It's probable that it does weed out a lot of those stragglers, and you know, we're gonna have a few big ballers that come back rolling, like similar to the what was it? The other bubble that everybody likes to compare it to.
Tulip Bubble.
Oh yeah, we had some big ballers coming out of the Tulip Bubble, the internet or the
.com.
the .com
Dude,
bubble.
My great grandpa, man, he struck it rich at the Tulip Bubble, man. He sold off right at the top.
Right
That might have had tulips coming out of his ears.
Short sold
Yeah,
some
tulips on tulips, baby.
Of course, this is when nobody wanted to buy tulips anymore.
Well, yeah, no, he sold them all right when it was like at its peak.
Get your tulips here. Get your tulips here.
So tulips, I got red tulips, purple tulips, blue tulips, every kind of tulip. All right, what else are we hitting on today, guys? Oh, hey, we're not doing the 3-on-3, guys out there and gals. You know, hey, we always forget that there are ladies in the crypto space. There's a lady in our chat right now, so we don't, you know, guys and gals, we're doing something different now. We don't. So we've done the coin competition every week, but from now on, instead of competing against ourselves, which is really fun for us, we're going to compete against you guys and gals out there as well. So does anybody want to elaborate on what we're doing?
Yeah. So in the past, we did 3-on-3 fast.
We're still doing 3-on-3s.
Yeah, I'm sorry. In the past, I was like, as soon as I said that, I thought, no. But in the past, we've done Coin of the Week challenge, and it's where we bought a new coin every Sunday, and then sold that coin on the following Sunday, and then just kind of had a competition between us. The problem is for radio, that's just a little bit complicated. Too many numbers and too many different things going on, and I wasn't winning, so I thought we'd scrap it.
I was winning, and I still thought we should scrap it because, like, not only was it hard to keep track of from an audio audience point of view, but I didn't even know where I stood. I mean, we had to have like an Excel sheet and all this crap. It was impossible to keep track of. So, basically what we're doing now is last week we kind of focused on gambling coins, and one coin we talked about was No Limit Coin. So they have a platform, nocostfantasy.com, and the link is in the description below, by the way, where you can go sign up, and you can compete like a fantasy game for cryptocurrencies. So you basically choose your team of 5 coins for that week or that day. We're going to do a weekly contest, and then you can compete against us. Create your team. Say this week I think it's going to be Omisego and Icon and Bitcoin and Litecoin. So you create your little team, and then we create our little team. I'm going to have my team. Prater, you're going to have yours. Brandon, you're going to have yours. And then we compete against you guys and see who comes out on top by the end of the week. I'll warn you, it's going to be me every week. There's no doubt about it.
In the losing bracket.
But still, come and try. Still try to dethrone me, because the Coin of the Week challenge, I mean, we all know who finished that on top. So
actually, I am updating it right now, and it looks like
that's only $20 behind you.
Shit, now I'm scared.
No, yeah, you won.
Okay,
for sure.
All right, good. The link is in the description below. Just click the link, sign up, make your team, and
we all lost. I'll just put it that way.
Oh yeah, we all finished under for sure.
Nobody really won in the Coin of the Week challenge.
No,
but now it's going to mean more, because
except for the short sellers that we were buying from.
yeah, exactly.
So when we do this, are we actually going to be putting No Limit coins on the line?
Yes.
Why not?
Yeah.
And
what's the prize? What's the prize for the winner?
Well, that will be to be determined.
We don't know. We haven't come up with that yet.
We're still working through all the details, but we'll have it ready.
$1 billion.
This is not advice.
$1 billion
right now.
Hairs.
We're just kind of introducing. we're just introducing the game and the competition and the idea of playing fantasy with us.
Yeah.
And
we have a link.
We have the link. Yeah, we have the link, so you can go and sign up and just be ready, because next week then we'll have all the details about how we're gonna do it.
Check.
Yeah.
Which kind of wrap up the Coin of the Week challenge here. Heston,
how did we?
You came out ahead this week. I mean, it's not Sunday yet, so we're still. Yeah. You were down 21.5%. You lost. You came out with $78
out of $100 investment.
That's bad. And I finished in first.
Yeah, Tater came in second with $75. Verge took a hit there at the last minute.
Verge was up
all week
too.
And then I came in last with Ether at 74.64. So I came in.
And if you remember, Hesto said that was going to be his pick if you hadn't picked it.
I know.
Come on.
Dang it.
Good job. Thank you.
Man, I probably would have picked something worse if I hadn't picked that.
Yeah, it's going to be cool, guys. So take an opportunity
Bitcoin Cash
to try to beat us. If you think you can beat us, go for it. I bet you can't.
I don't know, man. We all finished under.
But the market finished under. I mean, does it let you short?
I bet if we would have picked more shit coins instead of those top 10 every time, I think we probably would have been able to finish up.
Worse.
I don't know. I know. We would have had 2 big breakouts and then 7.
Yeah, we would have had to pick the right shit coins, really.
Yeah.
Well, I'd be interested to see what the market cap was when we started the challenge compared to what it is now.
Yeah. Well, I mean, I want to say back
it's lost about 70%. I mean, that's what it is.
I thought back in January it was about 600 billion. And what's it?
Just look at year to date on Bitcoin.
It's 266 right now.
Oh yeah, so we've lost $400 billion in market cap since we started. Yeah, it's kind of hard to come out on top.
Yeah. How much longer are we going to roll with this? We got 45 minutes. Do we want to get back into some of the investment strategies, or are we done with that?
I've kind of said all I need to say about investing. Just diversify
I have a lot more
and
to say about
have a
investing.
plan.
Specifically, this is
And
not investing advice.
I would say the main points: diversify, have a plan going in, and do your own research.
If you want to roll with an investment strategy, set something up ahead of time. Know what you're going to do. If it's DCA, work out your DCA plan. If you're swing trading, work out a good entry point, a good exit point, a good strategy for mitigating your losses, and definitely keep track of everything. Same with day trading, and make sure you do a lot of research and trade. Do some trading ahead of time that you're not using real money. Do some paper trades. That's what they call it before you start really, and keep track of that and make sure your strategies work.
That's definitely helpful. Yeah, no, it is. It is helpful.
And there's a million different websites where you can go put in basically like fake stock trading. There's a million different websites, different apps that you can use to try a different strategy out, see how it works out, and follow it for a year. You're not going to miss anything. I mean,
a lot of them you can backdate it too. You can run your strategy across the history of the market to see if it's going to work as well. I know Thinkorswim has a great one for stock market trading. I don't know. That'd be a good thing for the crypto markets if they could platform that's similar to that. And if there's one out there and any of our listeners know about it, we'd be super intrigued to hear about it.
Super intrigued.
Super intrigued because I haven't found one yet.
All right, guys.
Oh, that's my favorite strategy. And look, I appreciate everybody for coming on the live stream. And, this is what we got this week. We got the Easter episode. We're going to do more preparation for the live stream in the future. We're not just going to announce it 20 minutes before the stream starts. And that'll give people more opportunity to kind of come on and talk some shit if you want to. And just let us know what you think about decentralized talk. We're open to constructive criticism. I am very sensitive, so be gentle with me. But the rest of them, you can just go if you want to. Yeah.
Yeah, go hard on me, man. Yeah. It's out there.
It's out there. It's out there.
Live.
All righty, with that, we're going to end it up. And as always, guys, this is not investing advice. And stay easy.
Yeah. Thanks for tuning in, guys. We'll see y'all next week.